Good morning, guys. Today I bring you another Warren Buffett article from Yahoo Finance. Of course, Yahoo's going to be doing a lot of coverage on Warren Buffett, considering that, they host the annual shareholders for them now. And so there's a lot of positive kind of news towards Warren and his insight and all the other knowledge that he always produces in some of his, not some, actually all of his shareholder notes, his meetings, and his little brief, media interactions with Q&As. Today we're going to be talking about, it's going to be really brief about his outlook on our current economic situation, and some of the moves he did to, repurchase back some of the Berkshire Hathaway's, stocks. So I have here Reddit, and I'm a follower of Reddit. Between the three generations, the boomers, I'm not sure how many of them are actually on Reddit. I know a lot of the millennials that I know that I personally speak with are on Reddit, and that's what they follow as far as their stock picks of the day or the week. And it's interesting. I was trying to find it, but I can't find it now. A lot of younger generation, a lot of younger investors look at Warren as a has-been or a dinosaur, and that his tactics or his knowledge, and because of his wealth, how he invests, and if you try to mimic that, would not apply to 99% of the people, because he is one of those elites in the 1%. And that's very unfortunate, because I don't see it that way. I don't see, just because he is in that category of the 1%, that the way he invests, that is necessarily not going to work for other people who are trying to or getting into it. So so obviously it's hard to say what works and what doesn't work, right? Because the market is just so volatile and unpredictable. But there are certain ways you can gain an advantage. And one way of doing that is with, Warren Buffett has always came out and say, the intrinsic value of the company, you buy it at the right price, you buy at the discount. With that being said, in one of the articles that I was reading, and I read a few today on Yahoo Finance, and I'll probably have to look for it again. I know I saved it as a PDF on my other machine, but it's not here on this one. So one thing I read and I took from the article was the reason why he's buying back his shares of Berkshire Hathaway B was because he felt like the economy or the market wasn't treating it fairly, or saying that it was other people were saying it that it's overpriced, right? Because of the type of market that he's in and the things that he's investing in. And I took that like, how can that even be? Because you have other stock prices that are way more than what the Berkshire B stocks are. And as of speaking today, we'll just pull that up just so we have a better understanding of what the price is. $248.25. And interestingly enough is that, even on the Reddit forums, I was reading a whole different thing in regard. It kind of related back to Warren Buffett, and then, one gentleman. Oh, actually, it was in regards to Cathie Wood and the ARK ETFs, right? And somehow one of the comments led into Warren Buffett and like, oh, I've owned Berk B for 6 months now and it hasn't moved, any direction, or it hasn't moved dramatically enough, right? And I'm thinking 6 months, oh my goodness, what are we expecting nowadays with these, with crypto coins and SPACs, like and the worst of all is like GME, the way it moves every single day, like it fluctuates like 30 to 40% at any given time. Is that what we're trying to adapt to now. Like it's just unbelievable. You take GME for example, and then you take Bitcoin in a single day. 30 to 40% gains and losses, like in a single day. That's very dramatic. That's like buying a scratch off ticket and expecting, it's instant gratification. You win or you lose, right? Buying Berk B, it's a whole different level. It's not that. You have to. It's a long run, right? It's a long game, and that's, I think with that new generation, they tend to just kind of stare off Berkshire Hathaway and Warren's empire, conglomerate of all these different businesses. And one thing he did state in one of the articles was that, when companies acquire other companies, they tend to just, they want to manage it all and have a central organization. He doesn't do that. And he was very out there saying that, he lets the business run as is because it has been successful in doing so. He does not want to, break that trend, right? So one interesting thing is, I had a couple of videos going back in regards to opening up a Roth IRA with my wife. And one of the things I was considering, besides buying high dividend stocks into this Roth IRA, and obviously analyzing its worth and if it's a purchase or not, I've always I own Berk B on my own, and my first consideration was purchasing more Berk B as the initial start of this Roth. And then from there, I'll add on dividends. I know Berk B does not provide any dividends, okay? But I don't know what it is, but every time I look at their EPS, it's at 22,232. That is, if I took the formula for what I do when I do the intrinsic value, it is obviously anything compared to that is a value buy, right? Because when you do the math and you plug in the numbers, and which I have, I'll pull it up right now. Let me just get it onto the other screen. The intrinsic value is like all the way up there. And whatever the price it is now is like only a fraction of what Berkshire Hathaway is really worth. But then again, you're also, I believe Berk A and Berk B share the same stocks. It's the same thing practically. So Berk A, so you see how Berk A has earning per share is 22,000. So Berk B is literally Berk A, just at a cheaper price. So you're using, so basically when you buy Berk B's and when you buy enough of it, it obviously becomes a Berk A, because, and vice versa, Berk A shareholders were supposed to be, are able to just kind of liquidate some of their shares from Berk A to Berk B, and then, they can cash out some of it and still hold on a stake of Berkshire Hathaway. So it goes vice versa. So when you're buying, so it's literally like Berk B is just fractional of Berk A's, okay? I forgot how many fractions of it, but, it's a decent amount, right? Considering it's one share is 375,000, or almost 76,000 at this given day. And you have Berk B at 248. So with that being said, it's hard to, I understand that it's going to take some time. It's long-term growth. So people tend not to look at it as much. And that's very unfortunate, because I think there's a lot of value in the companies that Warren invests in, that he takes part in. It's almost like buying an ETF, because he obviously does all his due diligence, his homework in acquiring a company, and he holds on to it. And of course, we all know, because it's always advertised, that how much money Berkshire Hathaway has in hand, cash, right? Their cash flow in the billions, over X amount of money on standby for any given any situation. So that's one thing you don't have to worry about, them ever losing money. On a downtrend, he's always outperformed the S&P 500, and you can find that on all the written materials about him and his historic investments, even up till today. So, but one thing he does preach is that you if you're very hands off and you don't want to do any of the, just invest in the S&P 500 and let it ride, because that percentage has always been a 12% return or X amount of return. Of course, do your own due diligence and investigate all that information before you consider taking that approach, right? So, of course, everything I say here is just my opinion. I'm not saying you should go buy Berk A's or Berk B's, but my take on this was that there's sufficient articles on Yahoo and maybe other platforms, but I tend to follow Yahoo Finance a little more because that's where the bulk of Warren Buffett's articles come from. Of course, and then it leads you to other websites like Motley Fool and all the other ones. So you can see here there's a decent amount of Berkshire Hathaway and Warren Buffett related articles that I usually I read. It's like a 3 to 5 minute read, and that's pretty much it. I mean, so the gist of this video was there's going to be a lot of new generation investors. And when I say millennials, the millennials as old as 40 years old now. So they're not that young. They definitely are in a a different mindset at 40 as well. Of course, and then they go as young as 20 something. So my point is that even though the market, as we know it now, with the SPACs and cryptocurrency, has been such a, constant, like every second of the day, something is happening. Every second, the news feeds are coming in consistently. Everyone on YouTube is saying something. Everyone on Twitter. We have billion-dollar CEOs chiming in now, which we never had historically. I don't ever recall, as I was growing up, Jeff Bezos, Bill Gates, or the CEOs of any other major corporations or brands coming out and saying anything. It's definitely gotten more, mainstream now, especially with Elon. And then you have people like right here, like the Twitter CEO. They come out more now and just giving their 2 cents, and that affects everyone's mentality, everyone's thinking. It affects the market, and Elon definitely affected Bitcoin's market. Whether good or bad, that's a whole different take, right? So that's pretty much what I wanted to talk about today, is that, I'll try to link all the articles that I had, relevance to today in regards to him buying back his shares and but overall, Warren Buffett is still confident with the American economy. I don't doubt that. I don't doubt that either. It is still there. It didn't go anywhere. It's just that people are using their money differently. They're putting it into, unfortunately, a lot of speculation. Every day you see another SPAC. Every day you see another SPAC. And I just saw one earlier, and it's for a new space rocket. So I'm into those as well. But unfortunately, it's not like I dump all my money into all the different SPACs of all the space companies that are coming out. I pick and choose, right? I'm very bullish on Virgin Galactic, but unfortunately they had to delay their takeoff again, and that dropped the price of the stock. So it's very, I guess to some people it's like, oh, if it's not happening, I'm not staying. It's like that, right? But to me, it feels like, long term. It's definitely, it takes time. And I remember one thing that Warren has said, you can't get 9 girls pregnant and expect to have a baby in a month, right? In that time frame, you have to have 9 months or 10 months or whatever months, 9 months for a baby to be delivered. It just takes time. There's no rushing. You can't rush certain things. And building wealth and financially stable income cannot be rushed, in my opinion. It's just like real estate properties. You can't, get more rent than you for the month, until you get into the tenant's pay, right? So it's like every month you accumulate. You can't just rush it. You can't say, hey, give me this month's and the entire year's months of rents today. It doesn't work like that unless that person has that much liquid cash. Okay, so a lot of talking today. Thank you for sticking around. I appreciate it. It's just me talking about random things with Warren Buffett and his outlook on certain things and how I feel about it as well. Thank you guys for joining me. Bye.